Hey everybody, Corey Schrader, Black Creek Wealth Management. Hope you're doing well. I just wanted to get you a little bit of some information today, right before I head out on spring break. We're heading out to Great Wolf Lodge in Georgia, which is going to be kind of interesting. We're going to be just going for a couple days. I'll be back on Wednesday morning. Jossie's actually going to what's called States for Drama. She's in arts and crafts and all that kind of stuff. So we're going to get back because she's heading to Tampa on Wednesday. So just wanted to get out some information to you today because this week has absolutely been a whirlwind if you've been paying attention. If not, don't panic by any means. So if you recall, if from our conversations just on the last quarter and where things were, about 2 weeks ago, the market was up about almost 7% year to date. And I told all of you, assuming everyone got a meeting, I think everybody did. We were up about 6.5%. And I told everyone I'm really watching 3750 in the S&P. And the reason behind that is just because, again, nothing has really shown its ugly head from all this tightening that the Fed is doing. Well, this week it did. We finally got a glimpse of what all these higher interest rates are doing to certain banks. And Silicon Valley Bank, which is out in California, which a lot of these tech startup companies deal with, had some challenges in that they were basically holding longer term treasuries with the government, very secure and safe. However, because the Fed has raised rates so quickly, now their obligations are way higher than what they can actually pay out. So they had a potential run on their bank, and a lot of the venture capitalists out there said, hey, you got to get your money out of there. So a lot of people started running to go after their money because they had concerns about the bank being liquid to be able to pay their people that were giving them money. So that raised a huge red flag with the idea of, is the Fed raising rates too fast, too soon? And one of the things that Jerome Powell had said a couple of weeks ago that they really didn't talk about today on Talking Heads is they're watching this stuff. They're watching to see how their rates and how fast their rates are really impacting these financial institutions. And this is probably something for the first time that is starting to signal some sort of continual issues. So what's the result of that? The result is now the actual stock market is taking the Fed seriously. And I've been taking them serious, for almost a year and a half now. I've been telling people to get out of bond funds, and I've done that with all your portfolios. I've basically moved us to cash because honestly, you're getting the highest return for the least amount of risk. So why wouldn't you be there? Again, the market was up 6.5%. It is now only up actually less than 0.5%, 0.43% on the year. And not to say that it's going to hold that. I still think we're heading to about 37.50. A lot of people are calling for lower than that. I'm not nearly as bearish as that. I just know that this has to work out of the system. So, and one of the things I can show you, and again, I don't want to take up too much of your time today, but I do want to show you is this idea of where I see things going. And where I see things going, as I'll show you here, and this is just the S&P 500, and this is just looking at it really from the last couple of years. This is back December of 2021. This is where we're at today. All these lines and all this, biggest thing to take notice of is this, what is called a channel. And I've been watching this channel for a year and a half and been managing everybody's portfolios to this. Back here in May and June, I moved a lot of the growth investments over to more defensive, like high dividend, more cash, because cash went from 0 to 3.5 in June. Now it's almost at 5. It's come down a little bit because of today. But for the most part, we're still playing into this channel. And again, I believe, and this is the 200-day moving average, that's at 37.20. Okay. And I said 37.50. So I was, a little close. My belief is that line is going to meet the market's going to meet this line somewhere. It's going to be somewhere around 3750, 3800, and it's going to be a massive test. If it fails the test, it will go to the lows back here, which is about 3500. At that point, I truly believe that a lot of this system and a lot of these things that the Fed is doing is going to work through the markets, because the markets do look 6 to 9 months ahead. And a lot of this is coming by way of higher employment. The numbers came in a little bit hotter than they expected. Again, my mindset is they are going to put their foot on the neck of this economy until it's choked out. So PPI, producer price inflation, comes out next week, as well as consumer price inflation. So that's going to be another metric that the Fed is going to look to see, do we raise another 1/4 or 0.5%? But if this week is any indication, maybe some of these financial institutions are starting to crack a little bit, which will give them a little bit more pause. So these are things that I'm watching out for and managing around. Now, you're going to say to me, hey, Corey, okay, what are you doing with all my stocks? Like, if the market's basically about to tank, what are we doing? Well, if you remember, and I've told most of you this, if not all of you, is that I've carried a huge cash position probably now for 6 to 9 months. And the reason I did that is because I'm waiting. I'm waiting for all this to happen. But I do follow what's called asset allocation. Even though you do want to just be in the market when it's good and try to be out of it when it's bad, you can't time the perfect bottom. And where I'm going with this is, again, my level is 37.50. So that is what I'm watching for, to begin dollar cost averaging us back into growth type companies. And I'm not saying I'm going to dump it all in at 100%. What I'm going to do is slowly, in probably 10 to 15% increments, start slowly putting it back in to those areas that are going to grow out of this. And my mindset is that we've basically gotten to the point where we're starting to hit at an airplane landing, where we're starting to hit the tarmac, and we're going to roll out on the tarmac for a little bit, and then we're going to take off again. So as Warren Buffett says, if you love this, is be greedy when others are fearful, and fearful when others are greedy. We are almost to that fearful place. I am watching out for this, and I'm watching out to time this as best as I can. I'm not going to catch the bottom. I'm not even trying to. I just know that when we look back in a couple of years, the market will be higher than it is today. So I want to make sure that we're taking advantage of it, but I am using everything I can. My own pension fund manager friends, I'm looking at all kinds of pundits. I'm looking at everything I can to ensure that we are going to be positioned the right way to get us through this and to do it as safely and quickly as possible. So as of right now, I have us in, at least from a stock perspective, underweight international, underweight small and medium-sized companies. That is, again, by design. I'm also looking at high dividend paying stocks like your energy companies, like those types of things that do well to help us insulate those drops. Because again, if the S&P drops another 6, 7, 8%, those dividend paying stocks are not going to drop nearly as far. So it's going to help insulate some of that as we're getting those dividends. So like I said, going to just get through this 6 to 8 foot seas. It might be a little bit rocky. As we go through this, as it gets more rocky, I will have more commentary out for you. Please feel free to email me back or call me or let me know what's on your mind, and I will put another one out tomorrow if you want me to. As I said, I am your private investment manager and planner. If you need anything, call me. I'm here 24/7. That's what I'm here for. But ultimately, if anything has changed with your situation, please update me right away, because we are going through some choppiness. And ultimately, gosh, it's already in March. So I hope everyone has really good plans for spring break, or at least maybe you're starting to plan for the summer. But overall, I just want to say thank you for allowing me to serve you and help you get through all this. I really appreciate the trust. And, of course, if you know anyone that feel could benefit from this, or you feel is just really needs some help and wants one-on-one kind of relationship that you have, please forward this out to them. I really appreciate, again, any support to help me reach people that need my help. So again, thank you all. Have a blessed evening. I look forward to talking to you all again here soon. And, have a great spring break. Talk to you later.